everybody. Welcome to your Friday edition of the Trader Merlin Show. As I mentioned, it is Friday. Hope today's action was good to many of you. We were talking about that short position on the NASDAQ, how it came up to that supply, and I'm going to actually circle back and talk about that today because part of the discussion is, going counter trend and going against the rules. The other part is you got to take chances. You got to go out there and put money on the line even when things don't look like they're going to work out. Sometimes they do, sometimes they don't. And if we have a small stop loss in place, we should be good. So it is the 22nd of July today. As you can see by the graphic here, I've got a big old bag of money, and that is really, I guess, earnings is my major piece for this week, where we've seen so much differentiation with regards to earnings. We started off real bad with Morgan Stanley and JP Morgan a couple weeks ago, and all of a sudden started to look pretty good. So we'll talk about that and a few others. That's right. Oh, us short traders. Hey, you can go short sometimes, you can go long sometimes, Brendan. So let me real quickly run through your economic announcements and earnings. I was actually looking back through old shows, and back in October of 2021, I had Don Fron on the show, and we were talking about, companies that we liked and didn't like. And I remember one of them was Snapchat. I said, Snapchat's trash. No one's using it. It seems to be falling out of favor. I think the biggest mistake that the CEO and chairman of the board there, or board of directors, made was not selling. I think they had an offer for like $40 billion or something, and they decided it was not enough. You should have sold, you idiots. Your company's going down. Let's start there, work our way back from that one. So here is today's earnings calendar. Of course, Snapchat yesterday was the big crime scene. But for the 22nd, you had Twitter reporting, you had Verizon, Schlumberger, Healthcare, HCA Healthcare, American Express, NextAir Energy, and Cleveland Cliffs. Notice most of those beat today, except Twitter. Twitter missed a little bit here, and of course they pointed the finger at Elon Musk, said it was his fault, he did it. It's like, really? Okay, well, I didn't think he was the cause of your loss. He might have caused an exodus of some of your viewers or users, but Twitter showing pretty bad earnings today, but still is positive. I'll bring up the Twitter chart here in just a second, but that's your main earnings stuff. None of them were that big. It's really the Snapchat one that just blows my mind. Your economic announcements, pretty in line with expectations. There was no real wild cards or major outliers here. Your Canadian retail sales was looking actually pretty good. You see that down near the bottom. They're expecting 0.7% gain in retail sales. Expecting 1.6 versus a 0.7 previous number, and they came out at 2.2. So obviously very good for the Canadian market there, and for that reason, part of the reason you saw this happen. Here's your Canadian dollar, USD CAD. Bounce right here. Now, why is it going down there? Well, I think that by retail sales looking so much better, maybe they can slow down on their easing or raising of rates, which they have been relatively aggressive on going forward, but who the heck knows what's going to happen there. All right, that is the quick with the earnings. I want to show you Snapchat here real quick. SNAP, and someone asked me today in the hall, said, what do you think of Snapchat? Is it a potential buy? No. It's a buy at zero, right? To me, it's a buy at zero. It's $9.96. It's a $39 slide, or 39% slide today, excuse me. You just have this big gap down, and it doesn't look like it's going to stop anytime soon. Really, does any, let me see. I will make a poll here just because I have fun. That's a stupid poll. There's nothing to it. Let me go and add a poll here. And that one. There's no question. I just said yes or no. All right, let me try this now. Do you use Snapchat? All right, I'm just curious. And answer that one. Answer that one for me. I'm just curious. I know we don't have a lot of people here. It's Friday. A lot of people taking off, doing fun stuff. But I put that poll in there just for giggles. I used it years ago, but now I no longer use it. But I'm just curious what our audience is. Because, if you're looking to buy something, one of the really important things to look at is, are people using it? So, for example, when I first got started in trading, one of my really good friends in the trading floor, he was like, I'm buying Pokemon stock. I'm like, what do you mean you're buying Pokemon stock? He said, yeah, my kid is just like, he will not shut up about Pokemon, and he's got all these trading cards and everything, and everybody at school has it. So he's like, okay, I'll buy some stock, because if everybody wants this thing, I may as well buy some. And it ended up being a massive winner for him. Well, the same thing goes for Snapchat. If people are not even using a service, and do just an impromptu survey of all your family and friends, if no one's using it, then odds are this thing's just going to keep on going down. And it's kind of funny. How many times have you guys heard me say that you can be absolutely right just way too early? Or there's another one out there that I love that I heard years ago that says, if there was a cemetery for traders in the financial markets, it would be absolutely chocked full of people who were exactly right, just a little bit too early. And I love that one as well. So here is back in October. I remember vividly because I shorted it right here. It was on October 20th. It gapped up, started a rally. I shorted it, took a little bit of a loss, and was done with it. That was when it was like at 37 bucks. Well, here we are at 9. I wish I held that short. I actually shorted it back here when this thing started to gap down and sell off, and got out, made some nice profit, but did not hold it all the way down to these current levels, unfortunately. I think this is just simply a, what was that social media site years ago? MySpace. You know, there's like a MySpace type thing. It was really hot and fun for a while, and then it just fizzled out. They just did not keep the attention of the user. So this was your major bloodbath for today. But as far as bad earnings go, you know, here's the major ones that lost this week. Here's Twitter. So Twitter posted bad earnings and actually did fairly well today. Surprising. You had United Airlines posted pretty bad earnings, and they're still suffering. You can see the gap down, and it just keeps on drifting lower there on United Airlines. Another one that actually kind of surprised me was Las Vegas Sands. Las Vegas Sands, I kind of expected to do well, as it seems like more and more people are going to Vegas and it's getting back on track. Now, they did have bad earnings, and you can see a slight down today, but really not that bad, but they posted negative. And the last one, which is in the financial space, reported earlier this week, I think on Monday, was Bank of America.
Sorry, could you see?
I hate this stupid watch. I'm going to get rid of this damn thing. They reported back on Monday. You can see it gapped up here. It jumped up, sold off, and then just pretty much rallied the remainder of the week. So even though they had negative earnings, got caught up in the euphoria of the overall market. So those are the bad ones, but there were so many good ones. You had Tesla report better than expected earnings, right? You can see the gap up there a couple days ago and just surged. You had Philip Morris posted better than expected earnings as well, and it's surging. God, I hate Vegas. I love Vegas. It's fun to go just because. Netflix also posting. Now, here's what's funny. Netflix posted better than expected earnings, but really all they said was our subscribers didn't drop as much as we anticipated. So it's still shrinking their business, just not as bad as they thought, and therefore it popped up. What else do we have out there for good earnings? Lockheed Martin, gotta love some defense stock. LMT. Oops, click on the wrong thing. LMT. Actually, I think they reported on Tuesday, so they gapped down and been rallying ever since. So even with good earnings, they open up down. You had things like Alcoa, Biogen, IBM, Goldman Sachs, Charles Schwab, Johnson & Johnson. Those are all the ones off the top of my head that beat earnings and looked really good. All right, so 90% of you are not using Snapchat. And I saw a couple comments in there. WhatsApp and TikTok equal massive security risk. Correct, but you know what most people are using now? TikTok. I mean, that's like their communication device is using TikTok, which I don't use it at all. I do use WhatsApp, but that's just to talk to some people internationally. Never anything private is sent across any of these social media platforms. Tom says, Snapchat is that thing where you put a puppy ears and nose on your face and delete it. No, you can do that. Snapchat was one that if I wanted to send you a dick pic, I could send it to you, and as soon as you watched it, it was gone forever, right? It was just disappear. So I guess this was kind of cool for kids to send nudie stuff back and forth, but reality, it's sitting on your phone in an encrypted file, so if you really wanted to, you could probably go get it. But that was what made them popular to begin with, was that you could send these kind of view once type of videos. Great, cool, fun, okay. But then they did augmented reality, where you could put different faces on you and things like that. It was just kind of, whatever. There'll always be something new, you know, and I think it's important when you look at something and you have a really huge spike up in price, and you kind of look at the business model, you go, is this sustainable? Is this a passing fad like I think Snapchat was? Or is this something that's here to stay like Twitter? I mean, Twitter to me is here to stay simply because it's such an adopted communication tool around the world. Same thing with Facebook. Even though I think people might move away from Facebook, Facebook has done a great job of buying, you know, Instagram and WhatsApp and other social media platforms, so that if you do leave, you're still in their ecosystem. TikTok is the devil. You know, it's funny. I refuse to get on TikTok. Everybody tells me to get on TikTok, but nope. Oh, yeah. You know what I did forget today? I did forget to show you a little glass of whiskey over here. I went with the, this is to Rob up in Vegas, thank you. Or Ron, excuse me, up in Vegas, thank you. This is the Frey Ranch bourbon. Delicious stuff, by the way. There we go. So cheers to you all. Okay, so that was just the earnings front. I thought it was kind of interesting watching how they all unfolded. the sentiment clearly changed because 2 weeks ago it was like, uh-oh, we're going to have bad earnings. This is not going to look good. And then most of them coming out with pretty decent numbers. So all in all, I think that's what's helping prop this market up. The big question is what happens next week. As you know, we have a GDP number, advanced GDP number coming out on Thursday. And on Wednesday, we have our FOMC meeting. So let's go check the current status of what the expectations are of that FOMC meeting. It feels like expectations are that it's going to continue to decline, meaning no longer 1% is the high probability. It's 75 basis points. You can see here 20% that it will be a 1% raise, and 80% we're going to see 75 basis points, which was my expectation, which means Bill Addis is going to owe me a beer next Wednesday. Does Bill Addis acknowledge that the Fed's primary objective is to keep inflating? He hasn't, but you'll have to ask him that question. I don't know if he would acknowledge that their objective is to keep inflating. I mean, obviously they have got to be honest, the Fed's got a tough job. I mean, I certainly would not want to have their job. They got too many things to do, and we can all play Monday morning quarterback and go, oh, well, Powell should have done this and they should have done that. Well, look, it's a tough gig. Tough gig to keep the world's biggest economy rolling as they do. So let me go into a question, and then we'll do more market wrap-up. But I want to address this one kind of head-on because I want to make sure that it's clear the misinformation that's being spread. Obviously, everybody knows my dislike for a specific trader who I believe is a total scumbag. And Blake sent this one in, I think, day before yesterday. It says, yeah, Sam's a scam, but didn't he bring the odds enhancers to Trading Academy? If you search hard enough, you can find them and points system. Okay. So I'm not going to say that Sam is a scam. I mean, that's all. Everybody can have their own opinion of it. What I find very suspect is here's an individual who had his trading records subpoenaed by the feds. The FTC subpoenaed his trading records, and in the report, the lawsuit that was filed, it says that he doesn't trade very much and he loses money. Period. End of story. There's nothing else I can say. I don't know anybody else's trading history. I have a couple friends that are very transparent with me and they'll share their trades, but are they showing me all their accounts? Are they showing me just a cherry-picked account? I don't know. I don't know what goes on. What I do know is that the trading records were subpoenaed, meaning the government said, we're taking your trading records and put them together and said you lost money. And here you are saying that you're a great trader and how you not always make money, but you're doing really, really well, and you've got this flock of people following you. So, it's semantics. Do you call that a scam? I don't know. I would say it's not really open and honest, but I don't know. I don't know all the facts. I'm just going with what was presented in those documents, and plus my years of working with him. I have no love for him at all. I think as a coworker, as a colleague, as an employee, he was an absolute POS, and I'm so glad I don't have to work with him ever again. It makes me great. But to call someone a scam, that's pretty bold words, and I wouldn't say that. I just wouldn't trust much there, given the legal records that were in that lawsuit. So that's your take on it. Now, the other part here is you said that he created the odds enhancers. Absolutely not. This is another piece of misinformation. And, this drives me nuts because I don't know whether it's from Sam or from his followers that think that Sam created all this content and Sam created everything that Online Trading Academy teaches. That is absolute bullshit. The facts are that we had over 150 instructors. Online Trading Academy started in 1998. Sam came on, I think, in 2005. For 7 years, we were already teaching. We were one of the largest trading schools in the U.S. long before Sam got there. What Sam brought to the table is what his expertise was, which is he was an order taker. He was an order, to make that very clear, people, he was an order taker. He was not a trader on the floor of the CME. If you ever hear that he was a trader on the floor of the CME, whoever told you that is a liar, because he was not a trading floor trader. He was an order taker, which means he sat up above, banks called and said, hey, we need to buy this and this, and he would stack up orders and give those to the traders. Now, the only thing that's good there is there was an ability to see order flow. Now, of course, when you have 150 instructors and we were all sharing information and techniques and experiences, we've had other traders from floors of the Chicago Mercantile Exchange, the New York Stock Exchange, the NYMEX, exchanges around the world, all collectively building out the content at Online Trading Academy. That to me is why I think it's so robust. To give Sam credit for it, screw you. There's no way that Sam built this content, and I would argue that all the way to the end. 150 we would have instructor meetings where we'd all sit in rooms, and it was chaos sometimes, where somebody would say, hey, I'd like to cover this. And we, as a team, would either beat the hell out of it or look at it and go, you know what? Let's incorporate that into the content. How do we do that? And then we started to build out the odds enhancers. And it was a collective, collaborative environment where everybody, most everybody, not all 150 were involved with it, but certainly a large number of the instructors were involved in that discussion of how to build the best content with the most systematic approach to these markets. Now, again, in building out that content, nothing is guaranteed. I mean, even if you follow the greatest recipe in the world, you still may make a bad cake. Right? Something may go wrong there. So, nothing is perfect, but we felt like we built some of the best content out there. But absolutely not. I think it's a fallacy to give the credit out to Sam. And I don't believe, look, you could probably find everything online from every school out there because there's piracy rampant around there. So anyway, I wanted to address that one, Blake. You can call it and, put the nickname on there, Scam Sad and Katut. I like that. That's a funny one. To me, he's just Sam. It is what it is. And he knows there's no love lost between me and him. If I never have to see or hear from him ever again, that will be a blessing in my life. And I wish that the students that would take his classes would understand and look at him as a character and say, do I really trust you, knowing what you've done in the past? And I think more importantly, whenever somebody, if you're a Sam Seiden disciple here, and maybe you are, this guy will go out and draw zones all over the place. Zone after zone after zone after zone after zone after zone, and he'll revisit those zones only if they hit. And he'll be like, see? Look what we did here. Our zones hit to the T. Nailed it. Hit my zone. And look how much our people made. Blah, blah, blah. Chat was, showing a bunch of money being made. If you are in that group, what I would encourage you to do is just say, hey, Sam, can you explain to me exactly how you drew that zone? Because in all the years that he was at Online Trading Academy, he didn't do it. One of the biggest complaints about Sam was that. He would draw zones and not fully explain it. You would look at it and go, that's not a supply or demand zone. There's no, you can't make a range there. There was really no, it's arbitrary. Show us. I was part of his school and feel it was not valuable. Yeah, good. Isn't Jasmine with Sam? Yes. She actually is in the lawsuit also, there is a footnote about Jasmine. I can't remember what it said, but Jasmine's never done anything bad to me. Jasmine's always been nice. I don't know about her trading at all, so I can't really say anything bad about Jasmine. But having worked with Sam, again, no love loss at all. Best thing that ever happened to Online Trading Academy was having that scumbag depart. Honestly, it was one of the best things ever. Nothing perfect. That's why it's mainly about your risk management. Yep, exactly. Why does he like taking credit for everything? Because he's an egomaniac, right? He's an egomaniac. He likes everything to be about him. He thinks that he's the greatest person on the planet. It's great, good for him. But you can't take credit for that. He says, I created the original supply and demand methodology. No, you know who created the original supply and demand methodology? Cavemen. Cavemen created when they're like, I have fire, you want food, I make trade. That's supply and demand. Apply it to charts, a big deal. That's not like, creating anything that's revolutionary. It's called support and resistance, but quantifying support and resistance, which many of us have done for years. One interesting thing about, and let me address that one too. A lot of people here might be using things like support and resistance, right? And that was years ago where I guess my biggest problem was. And as I started to work with some Chicago floor traders, Michael Young and Craig Weil, Marty Dim, these guys really kind of helped explain it. Like, look, things don't turn at a specific number. A lot of times they'll turn into range bound. So, the methodology that we've built, and especially the odds enhancers, identify a range of prices where we feel like price may come down to in turn. So, if you're someone who uses support and resistance, just think of supply and demand is support and resistance, but is quantifying how strong that support or resistance may be based off of the odds enhancers I discussed the other day. All right. One trade or even 5 trades, who cares? I want to see 100 or 1,000 trades from the system. Yeah, I agree. Do you have to interview him on your old YouTube show? I did. Margaret, I did. And here's the funny thing. So as you guys might know, Power Trading Radio is a show I did for almost 10 years. And part of it was anytime there was a visiting instructor at Online Trading Academy, I would have to bring them on the program. They just automatically scheduled the guest. So every time Sam was on, I always just kind of took a deep breath and said, I'm doing this for team effort here. I'm doing it for a team effort. It's funny is, out of the 150 instructors, there were certainly a handful of people I was like, I don't know. Are you really a good trader? You can tell by the way people ask questions or answer questions and their level of understanding. What was funny is if you go back and watch, they might still be up, the old power trading radio shows on YouTube. Just look for any show I do with Sam Seiden. I can only ask him one thing. If I asked him, what is stochastics telling you in this price chart right now? I have an ascending triangle pattern here going on this Google chart. How would you play that? Sam, tell me about supply and demand. Okay, well, supply and demand, that's it. He was a one-trick pony. Tell me supply and demand, that was it. And it's comical having him on the program talking about that. But anyway, I had to address it just because I need people to make their own decisions about it. I need people to do their own research. I need people to look up their instructors. If you're taking a class with me, hey, do yourself a favor, look me up. If you're taking a class with Bob Dunn, look him up. If you're taking a class with, Brandon Wendell, research people, right? I mean, quite often, if there's bad things about somebody, you'll find out about it on the internet. Now, granted, a lot of stuff can be slanderous, or it could be somebody saying something that's untrue because they hate an individual, right? For example, I hate Sam. Hate's not a strong enough word. I hate Sam. However, I'm not going to say anything that's untrue, or I'm not going to make up stories about him. I'm just transcribing facts from the lawsuit and my personal work experience. So, I guess as traders, we're all going to experience, or as people in life, we'll all experience people we just simply don't get along with. You'll find people that have questionable character, and you align yourself with people that you want to align yourself with. But always do your research and vet the people you hang out with. Otherwise, you end up hanging out with people that you really don't want to. All right, so Blake, there you go. You can call him whatever you want, but do your own research before you call anybody a scam. I'm not going to say Sam is a scam. I mean, he's got some skill sets there with understanding supply and demand. But just a lot of questionables how you actually draw out these zones leaves a lot of people wondering. Okay, yesterday we talked about a couple of, let me see what other questions here. Yep, Power Trading Radio was with John O'Donnell. On one show you said that you paid attention to trend, and Sam Seiden said he never did. Oh, so Sam Seiden said he never pays attention to trend, which is ridiculous. He also said the volume is insignificant and plays no part in his trading. That's absolutely insane to think that volume plays no part in your trades. So if you have a security coming down to a demand zone, and you've identified this demand zone, and there's high volume in that demand zone, is that more significant, or would you rather have extremely low volume in that demand zone? To me, I'm looking for high volume in that demand zone. I want to see the capitulation at that demand zone. I want to see the pain, the fear, just bam. Yep, Forex it is very surprising. I use supply and demand. Hey, look, wait, Forex dissector. Supply and demand works. That's the fundamental driver of price and everything. That's exactly what I'm saying. Supply and demand does work, but I think some people's interpretations of exactly how those supply and demand zones are, like when I draw a zone, it's very clear. You'll be able to see that zone. When Sam will draw a zone, you'll dissect it on the hourly, the 5, the 15, the 4 hour, and you go, how the hell did you get that level? It doesn't make any sense. And if it hits, he'll be like, see? And if it doesn't, he'll go, oh, well, we forgot about that one. 1966, Ted Warren was talking about support and resistance. I have the book. Yeah, and it's much deeper than that. I mean, I think it goes back to the very beginning of markets, right? It's just supply and demand. If you talk to Jesse Livermore or something, how was he making his trades? He was looking at trends and looking at price tickers moving up, and obviously that thing is moving up because demand is exceeding supply. Economics 101 has nothing really to do with trading. It's economics and nature of price. OTA material is awesome. I can admit that why it didn't work for me before was because I didn't have the discipline to actually adhere to the system. You know what? I have to be honest too. When I took my first class back in 1998, the curriculum was kind of shoddy back then, and it took years to refine it with all these different instructors, and there's so many great contributors. But I did the same thing, Brendan. I did not follow the rules when I started. It was kind of painful to look back and like, oh, you idiot, Merlin, why did you do these things? And a lot of them ended up being those 10 laws that I mentioned. I always talk about this, my 10 laws of trading, which I keep right here. That was losses. That was just pain and suffering in the markets is what made that list. And if I followed all my rules, or all the rules that were presented to me, I'm pretty sure my losses would have been a lot less. So for anybody starting out, get your set of rules in place, follow those rules, and modify as needed. All right, what else do I got there? I will divert. Yeah, I will change. I remember when Sam Seiden was on the show, I asked for help, advice. He was... yeah, exactly. Well, we'll leave that alone. We can move on. I try not to bring him on, but, you know, I sometimes it bugs me when people call him a scam just because you don't know all the facts, you know, and I don't want my personal opinion to sway anybody. Do your own research. Dig. Look at the lawsuit. Okay, next piece. The EVM stuff. So, Echo, you sent this yesterday. You also sent a good one on psychology that you would like to do a session on trader psychology. I'll do that next week, and maybe I can get a psychologist on. Maybe I can get... oh, my God. Totally forgot his name. Oh, my God. Woody Johnson. Jeez Louise. Maybe I can have Woody Johnson come on the program. I'll see if I can get him on. If not, I can answer a lot of psychology stuff because that is my perspective of trading. It's almost all psychology. But Echo said this, and you know, we talked a lot about crypto yesterday. I wanted to make sure that Brendan was not watching the show yesterday. That's why I did crypto. I'm just kidding, Brendan. We were missing you yesterday. I figured you'd be tearing me apart on yesterday's show. He says the EVM stuff, which is Ethereum Virtual Machine, sounds fascinating. I can just imagine how it could turn into an actual operating system and challenge Apple and Microsoft. Being portable and lightweight on any device it could run on, new or old. Question is, how would the graphical user interface look like? Well, it would look like a standard desktop because when you run an instance, when you create a virtual machine, it looks like a normal desktop. So if I was using a let's say a Linux system right now, and I wanted to use a Windows profile, I might have a Windows virtual machine on my computer, and I double click that, and it will bring up an interface that looks just like my Windows PC or Mac OS. You know, so we can have multiple instances of different operating systems on one computer. And what makes Ethereum so unique is it has this massive distributed network of nodes, right, to keep it decentralized. But each one of those nodes is a virtual machine. So we are kind of connecting to all those, making it this giant, as Vitalik puts it, world computer. Now, as far as completeness, I thought this was kind of interesting. Vitalik spoke at a conference a couple days ago. And in that conference, he said, if you look at where we are today, Ethereum is about 40% complete. As soon as we do the merge, which should happen in September, we'll be at about 55% complete. And I was like, 55? Wow. Because you have all these other components they wanted to build onto it, making it, you know, sharding a possibility, adding in roll-ups and other features to get it to over 100,000 transactions per second. Very interesting. And to me, I think that's, again, part of the reason why we've seen Ethereum have such a nice pop. Layer 2, yeah. I mean, you're talking, so ZK Snarks is a roll-up technology, zero knowledge proof, but a little more complex than what we'll discuss on this show. But layer 2s are definitely one of the scalability solutions for the entire crypto space. But if we can get the base layer to use roll-ups, specifically ZK roll-ups, then I think it would be much bigger for the ecosystem. It won't need layer 2s, which would be very interesting. All right, so there you go, Echo. User interface will look just like a normal desktop. Next question came in. Les, he says, with fractional shares that some brokers offer as a sale as low as 1/100th of a share, will that count as one transaction? Could that affect the price volume of a high flyer stock? A volume of 100 would only show as one share. So if only 100 shares were sold, but that was all fractional, it would show as a volume of 10,000. No, not correct. So fractional shares don't happen on the exchange level. What's going to happen there is if I'm, let's say, ABC broker, right? So I'm ABC broker and I allow fractional trading to my customers. What I'll do is I will keep all of that internal. So if I have, 100 customers that each have 1/100th of a share of Apple, okay, well, that's one share. So when the transactions happen, it's almost like a layer 2 technology. I'm not going to the exchange and reporting levels. I'm doing all of it internally because sub one share, nobody cares about those transactions. If it starts to get bigger, yeah, I need to go to the exchange and trade those. But generally, it's going to happen on the broker level and never go to the exchange. So you won't see, fractional shares transacting on the time in sales. It's not going to happen. Remember, if you are trading fractional shares, you don't have access to level 2. Most likely, it's going to be happening on the broker's end. Dob Dunn's a game changer for me, simplifying my way and looking at charts. Yeah, there you go. I don't marry my trades anymore. Should never, right? Never marry a trade. It's always just get in, get out if it's wrong, and who cares what happens. You know, let me take a sip of this whiskey, and I'll revisit the triple Qs trade we made yesterday. I didn't close it out. I left it open. But we were looking at triple Qs yesterday. So let me bring up the QQQ. And I mentioned, I was pretty clear about it, and I want to make sure I was vocal about it, saying, look, if I'm shorting this lower yellow box right here, I'm going against the grain, right? Because it feels like in this window of price right here, let me just show you there. It feels like if you just look at this looks like a beautiful uptrend. So I'm going against this short-term uptrend. I'm shorting this rally, which would be risky. If I zoom out a little bit, okay, now it makes sense. I'm shorting as it comes in an overhead supply level. Awesome, right? That looks great. Where it starts to concern me is, look at the downtrend. I'm definitely going against the grain here. So hopefully I made that clear yesterday that said this is a high-risk trade for me. If I'm wrong, well, I'll get out when we get above 315. We get above 315, I'll tap out and call it a day. For now, it drifted down a little bit today, so I got a small little winner going. I'm happy about it. I have 30 puts, so you've got no full transparency. Daniel says, I don't have video. You should. It's streaming on my end. So in this case, you know, I'm anticipating it selling off here, but I have to be careful. I feel like it's a catch-22. Am I either going to respect the bigger time frame, which is down, or the short-term intermediate one, which is headed up? And my gut tells me we'll probably end up coming back down here. I will trail stop this, so I lock in some profits along the way. But if we get above 315 on triple Qs, I will stop out of this one and probably flip and start buying calls. Why? Well, because this might be the beginning of a new uptrend, right? We've been down all the way since November. It's just been ugly, 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 and now all of a sudden starting to show some strength. If we broke above 315 on triple Qs, that means we're making new highs. Therefore, that trend may reverse, and we might see some move to the upside. No worries, Tom. I didn't see question marks. Or what type of minimum win-loss ratio should you aim for? Yeah. You know what? Using a metric of what's your win-loss ratio to me is a fool's errand, because there's two factors there. You could look at it as if I have a 60% win ratio and 40% losses, would you guys say that I'm a good trader? I'm just curious. If I have 60% winning trades and 40% losing trades, would you say I'm a good trader? Yes or no? 60-40. 60 wins, 40 losses. Am I a good trader? You know, and ultimately, am I going to be making money in the long term? Simple yes or no. The truth of the matter is, you can't tell. You can't tell. Because I could be 99% profit. I could be 99% right on my trades and miss on one trade. But that one trade is so big that it erases all of my gains. Brendan says maybe not. Depends from Gary. Right. It two factors. So if my average win ratio, meaning reward to risk ratio, is like a 1.5 and I'm 50-50, then I'm making good money. Right? So if I make two trades and I'm 50-50 on those, but on my losing trade, I lose 1, and on my winning trade, I make 1.5. I'm making money, right? So to say it, exactly, Chris, it depends on your profit loss. So you can never say what win percentage should you look for. You know, in my peak, I was doing like almost 70%, but that was back in the late 90s, and I was high-speed day trading. Now, I'm very happy with having like 65%. Great. The key is I can't take big losses. I think that's probably more important than any other topic. You could have a low winning percentage and a very low reward to risk ratio, but as long as you're not taking monster losses, you can recuperate. You can get back from those losses. Right? The big ones are the ones that just destroy you. Like I say, if you're in a stock and it drops 50%, now it has to have 100% rate of return for you to get back to break even. Math probability there, you're putting yourself in a hole right away. So there we go. Good. Most of you got that one. Don't know yet. 60% wins is an average of 5% per trade. 60% wins at an average of 5% per trade. Yeah, there you go. Yep, depends on the reward risk ratio. I use 2-to-1 and 5-to-1 has been most successful. You know, I think my only challenge there, Dave, is when you, at least from my experience, when you look at traders who like have a 10 or 20 or 30-to-1 reward to risk ratio, I think there's a psychological defeat mechanism that goes on because you're not exactly going to be getting that every time, right? I mean, how often do you guys hit a 20 to 1? Not that often. I mean, we get them, and it's fun when it happens, but that's not like your bread and butter. Your bread and butter is going to be maybe some 2 to 1, some 3 to 1s. I mean, that's the stuff you can kind of pull consistently out of the market. But getting a 20 to 1 winner is very difficult to do. So I have a challenge sometimes in new traders, especially teaching them. They'll set their targets like way, way, way higher than. But you see, there's 6 other supply zones between here and your target. Why don't you mapping those ones up? Well, the reward's not enough. It's like, well, but that's logically where it's going to turn. You have to. I'll give you an example. Let's pick a stock. Let's go to Twitter, just because it's the one to look at today. Here's Twitter. So let's say you decided to buy long today, right? So you're going to buy long right here. You went long on the close going to the weekend. Smart move. Just being sarcastic, by the way. And they'll be like, oh, well, my target's going to be way up here, and my stop loss is going to be right there, right below the lows. Okay, great. So you have a $1 stop loss and a $15 price target. So you're shooting for a 15 to 1. Like, really? Well, what about these other areas? What about this one right here as it closes this gap, right? You got one at 45. You've got some other areas that are up here right around, call it 50, right? These are all areas where potentially price could turn around and stall at. So to ignore those, to me, makes it challenging. And I always look for the ones that are closest to price and see how much difficulty will it have to get to some of these levels. In crypto, 10 to 1 higher probably is not too hard. Correct. I agree with that. But it's also, the tough part is taking losses. And Brendan, I'm pretty sure, correct me if I'm wrong, but be honest, you're not getting stopped out on your crypto. You're buying and you're a hodler. So there's a big difference there. If you're a hodler, yeah, you're going to get 10 to 1s all the time. I get them regularly. However, as a trader, it's all of a sudden becomes very difficult because if you are going to keep a 10 to 1 and stop out when it gets 1 against you, you're stopped out a lot. Because this is an incredibly volatile asset class. What else we got? Better off playing the short game, taking profits, and then reset. Correct. Unfortunately, we had that discussion yesterday with Tom's question regarding the hodl effect. Does it fly in the face of what OTA teaches? And I would argue that it does. It does fly in the face because OTA is always saying stop losses, stop losses, stop losses. And a lot of hodlers, including myself in crypto, I'm not worried about it. There are some cryptos I've stopped out of just because I don't really trust them that much. But you ask me about Bitcoin or Ethereum. Look, I over time I will do fine in those, so I'm not concerned about it, and I will hold those past stop losses. Dave says I cut my zone in half to allow 2 contracts under my rules. That makes my 5 to 1 much more achievable. Correct, absolutely. That's the big part of it, is letting those winners run. And that's one thing I think a lot of new traders have a hard time dealing with is you start off with 1 contract and hit your target. What do? Do you get out? Do you trail it? Do you manage that portion? If you have 2, it's great because you can hit your target 1, unload half your position, and just lean back and go, okay, this is all house money now. Now you feel less stress, right? Letting that second one run. Correct. Oh, Brendan says, I hold stocks. I only use stops in trading. Good. And I think it has to do with your mindset. And Brendan, you're like me. You know that there's specific, you have stocks. I don't hold any stocks like that, but specific cryptos that I'm going to hold no matter what. All right, how much time we got? It's 39. Let's keep on moving. Get through some of this. All right, here's an interesting one. Brendan, you may be able to answer this one as well. Liz says, have you ever tried to participate in any ICOs? I actually was filling out the forms, and I just decided to back out. That was in 2017 during the heyday. It felt shady to me. She says, if so, did you run into KYC issues with your various launch pads? I asked because recently I wanted to participate in the Movin ICO, which uses BinStarter as its launch pad. I bought some BSR to stake in BinStarter, but I was unable to stake it as I had to complete KYC as a last step. If you live in the US, you can't get verified, so that begs the question, who is participating in all these ICOs if it's not possible for US people? Is there really no way to participate in it? Do you know of any launch pads that don't require KYC? I don't know of any launch pads particularly. I know certain sites like KuCoin and some of the other Singapore ones don't necessarily do KYC. So I don't know on ICOs. What I can say is if you really, 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 really want something bad, you can go in there with a VPN. Now, it really depends on the extent of their KYC. A lot of them, it's just they'll track your IP address and say you can't get to the site. Okay, great. If that's the case, then you use a VPN and say you're coming from Singapore or China or Japan, wherever you can get in with that VPN. If they're actually asking for IDs that has your address and all that stuff on it, then you're probably not going to get into some of those. What did Brendan say? I don't do ICOs after I got burned in 2017. Yeah, I as much as I want to, I'm not going to mess with ICOs. It's just one more factor I don't want to mess with. Moving was a big one. Just going to keep on going. So is Steppen, they're different, right? Steppen and Moving are different ones. I know they're all basically the same thing. They're tracking your movement with shoes and cool. So sorry, Liz, don't have the answer to that one. And I think that's it. I got through all my questions for today. Good. Let me see if I didn't get anything cut through here. Perfect. All right. Well, let me know if there's other things you want to talk about. That's my issue today. Taking high shorts on MES. Took some off, then took the rest off before the big move down. Oh, well, I mean, look. As a trader or investor in any asset class, you will always have a moment where you just shake your head and say, damn it, why didn't I hold on to that? Or why didn't I get out early, you know? I could look back at my crypto portfolio and be like, why didn't I just get out in November? I knew it moved up too much, too far, too fast. I should have just unloaded. So what? You didn't do it. Shut up, move on. If it's something that bugs you, you know, if it's a recurring problem, in this case where Chris is talking about that, you know, exited your positions before it really had the big move, then do your best to hold that second position longer. Maybe that's modifying the stop loss, stretching it out just a little bit, and giving it a little more wiggle room because you already are playing with house money, right? Because you sold the first half, and let that second half run, right? To me, that's probably the best way to approach it. And the good news is you can always experiment, right? If you are constantly going to be trading the micro ES, then tweak it a little bit and see what the results are. Get yourself a little spiral notebook and journal. Say, okay, this time instead of having a 5-tick stop on my second portion, I put in a 6-tick stop loss. What was the impacts of that? How did that impact the market there? So, a lot of it's personal experimentation, testing the system. I just watched a couple weeks ago one of the videos of Elon Musk. I think it's Return to Mars or something like that, or Return to the Moon. Return to Mars? I don't know. It's basically the story of SpaceX. And if you look at how much trial and error they had to go through, it almost broke them. Right? They barely made it through with their financial crisis over at SpaceX because they kept trying different things. It wasn't working, kept crashing. And ultimately, you make little tweaks. And then all of a sudden, it lands. Okay, now we've got the landing done. Now we can start to change another component of it. Okay, now we can change this and more efficiency. Trading's no different. No different at all. Right? It's constant modification. It's constant awareness. It's constant tweaking of your rules, your psychology, your platform, execution skills. That's why I love it. It's always changing, constantly changing. Here's a tip. Watch what Binance endorses or invests in. They have an edge. They do. So Binance, being the biggest exchange in the world, they also have vested interest in a lot of ICOs. So you can do an ICO, and if the ICO doesn't have an exchange to trade on, there's not much point. If you got no real venue. What will happen is if something doesn't trade very well in the ICO market, they'll go to something like SushiSwap or Uniswap or PancakeSwap and create a liquidity pool, and you can trade it there. But that's not really trading, right? You got to get to the big exchanges, which means more people have access to it. So what Binance will do is they will buy into some of these ICOs and say, okay, because we're buying in, we're going to list it on Binance. And now you already have the knowledge and that it's going to be listed on exchange. To me, that's power. And Brendan's right. Watch what Binance is doing. Binance, because if they're backing a project, they're going to list it. Great, done. All right, what else do I got? From the 4-hour chart, do you think it would be wise to go long? Do I have that? Let me see real quick. 1 second. I'm going to bring up CliK. I have not looked at that one. So the fact that Binance invests in Steppen increased my own confidence to percent. Yeah, and they're going to be wrong sometimes too, right? I mean, they're not going to hit everything perfectly, but they have the money to back it, so they could do pretty well there. What did you want? 6J1. All right, so here is the. Why are you not linked up here? 1 sec, I'm trying to bring it over to the platform. There we go. Let's see what level you're asking me here. To go long at 00731. So I'll put my cursor on there, 00731. So Would it be wise to go long? Well, it would not be wise. And the main reason is, if you're looking to go long, right where I have my cursor here, all right, at 731, we're still in a monster downtrend, right? And you're assuming that this is going to end up moving to the upside. I don't know if that's necessarily true. That would mean that the dollar is going to have to show more weakness. You're absolutely going against the grain here, so I wouldn't call it a wise choice. Could it play out? Sure, absolutely. You got to make sure you put your stop loss down here, because unless you have a vision problem, it's pretty clear this is one of the biggest downtrends you're going to see, right? It is nothing but down. Now, I don't have that one over here. I don't have the futures chart on this one, but if you look at Japanese yen, where'd my Forex go? Yeah, this is the opposite. Really, for me, it's all about what the dollar is doing. So if this dollar continues to drift down like this, yeah, I think that you're probably safe on that one. I do feel like the dollar's going to keep pulling back. I think it's going to come right down here towards this area that it broke out from back in end of June, which is right around 105. So, we're at 106.50 right now. That's another 1.5 to the south side there. That should pop that Japanese yen to the upside. But the trend, I still believe the trend in the dollar is up. This is just a pullback. So I would not marry that Japanese yen position. This looks like the dollar is still the lead dog here. What else do I got? I buy downtrends, expect pain, and months of hell. Yeah, well, I guess if you're going against the grain in something, so in that example, you're buying the Japanese yen, you got to ask yourself, why am I buying the Japanese yen? What are the factors that make me feel like in the next 3 months, 6 months, or whatever your time frame is, that the Japanese yen is going to be doing better? If you can't find anything, then don't take that trade. There should be some justification for wanting to go long or short on anything, even if it's something like cryptocurrency. Okay, working, clicking into things now. Yeah, trying to. All right, let's see. Don't really trade is the biggest word of the day. I had to divorce USD/JPY today. Well, the best thing about divorcing a stock or a currency or crypto is it doesn't have to take half. Oh boy, sorry. Too soon. All right, I think that's going to pretty much wrap it up for me. Let's kill this show for today. Again, our topic today for the Trading Week wrap-up for the 22nd of July was really mainly the earnings. And I think next week we've got a ton of earnings to look at. You have Microsoft coming out next week with earnings. You have Google coming out next week with earnings. You have Amazon. You have Apple. So it's going to be a huge week. That's certainly going to be later on in the week. Do you use dollar? No, I pretty much look at the dollar index. The Dixie, DXY, not the $DX. So DXY is what I use. That's I would say my major one that I'm focusing out when I'm trading currencies. So again, earnings. We've got earnings big time for next week. We also have major announcements. You're going to have a Fed announcement, of course, on Wednesday, which we'll be eagerly watching that one. I am of the belief we're going to see 75 basis point raise, not a full point. Unfortunately, GDP numbers come out on Thursday. If they came out on Wednesday or Tuesday, we might actually see that impact the decision. But my guess is the Fed already knows what that advanced GDP number is going to be. All right, that's going to do it for me, guys. If you have comments, questions, feedback, you know what to do. You can email me, TraderMerlin@gmail.com is a way to get in touch with me. Or you could put your comments down below the YouTube video. That's another great way. I generally take those questions and incorporate them into the presentation. So, Blake, thank you for your question about Sam. Again, it's not just me picking on Sam. It's really saying, hey, look, do your research on people before you think that they're an oracle and that they're the greatest person on earth because they kind of portray that image. Do some research and check people out. Echo, thank you for your question on the EVM. I will probably Monday or Tuesday do a show on psychology. So those of you who are regulars, you might not like that one because you've been through it too much. But I think it's important to talk about psychology. You had Les with some good questions as well as Liz. So thank you guys so much. Have a fantastic remainder of your week and have a fantastic weekend. I'll see you on Monday. Take care.